Most investors still think the biggest opportunity connected to SpaceX hasn't arrived yet. They're waiting for the IPO, waiting for the headlines, waiting for Wall Street banks to finally open the gates. But behind the scenes, something much more important may already be happening. Because if history has taught investors anything, the real money is usually made before the public realizes what's happening, not after. And that's exactly why some analysts believe the companies quietly tied to the SpaceX ecosystem could explode long before retail investors even get a chance to buy SpaceX itself. At first, that sounds ridiculous. How could stocks connected to a private company outperform the company everyone is obsessing over? But when you connect the dots, the picture becomes much bigger than rockets. This is suddenly about AI infrastructure, satellite dominance, military contracts, defense technology, data transmission, energy systems, semiconductor demand, next-generation manufacturing, and one of the largest technological build-outs happening anywhere on Earth. And almost nobody is looking at the full chain reaction yet. Because what most people miss about SpaceX is this: it's no longer just a rocket company. That narrative is outdated. Today, SpaceX is quietly becoming something much larger. An infrastructure empire. And infrastructure booms create hidden winners everywhere. Railroads created steel giants. The internet created cloud computing giants. Smartphones created semiconductor giants. And now, many investors believe the space economy could create an entirely new generation of monster stocks. But here's where things get interesting. The companies most likely to benefit first may not even mention SpaceX in their headlines. That alone changes the entire picture. Because while retail investors chase obvious names, smart money often moves toward the hidden suppliers, infrastructure builders, and ecosystem enablers before the crowd catches on. And according to multiple market analysts, that process may already be underway, especially after the massive acceleration of Starlink expansion, global satellite deployment, defense partnerships, AI data transmission demand, orbital infrastructure spending, and military communication modernization. At first, many investors underestimated Starlink. Some even laughed at it. Internet from space? It sounded expensive, risky, possibly unrealistic. But then something happened that changed Wall Street sentiment almost overnight. The numbers started appearing. Subscriber growth surged, governments became interested, military partnerships expanded, rural infrastructure contracts exploded, and suddenly, Starlink stopped looking like an experiment. It started looking like the future backbone of global connectivity, and if that future becomes reality, the ripple effects could be massive. Because global internet infrastructure is one of the largest economic opportunities on Earth, especially in regions where traditional fiber networks are difficult or impossible to build. But the real signal appeared somewhere else. Defense analysts started paying attention. And this is the part most investors are missing. Modern warfare is changing fast. Communication speed matters more than ever. Satellite resilience matters more than ever. AI battlefield systems need constant data flow. Drone systems need real-time connectivity. Autonomous military technology needs uninterrupted infrastructure. And suddenly, space-based communication systems stopped feeling optional. They started looking strategically critical. That changes the investment landscape dramatically. Because once governments begin viewing space infrastructure as national security infrastructure, the spending can become enormous. And historically, government-driven technology cycles create some of the biggest stock market winners ever seen. The internet, GPS, semiconductors, cybersecurity, AI, all followed similar patterns. At first, the opportunity looked niche. Then governments got involved. Then the spending exploded, then Wall Street arrived late. And some analysts believe the space economy may be entering that exact phase right now. But there's another layer here that's even more important: AI. Because most people still separate the AI boom and the space boom as if they're unrelated. But behind the scenes, they're becoming increasingly connected. AI systems require massive data movement, ultra-fast communication, global network reliability, edge computing, low-latency infrastructure, and orbital communication systems may become one of the key pillars supporting that future, especially as autonomous systems expand globally. That possibility alone changes how investors are beginning to evaluate companies connected to satellite infrastructure and advanced aerospace systems. And this is where the story starts getting serious, because several public companies are already deeply connected to this transformation. Some provide components, some provide semiconductor systems, some provide advanced manufacturing, some provide launch technology support, and some are quietly positioned near multiple megatrends at the same time: AI, defense, space infrastructure, government modernization, and next-generation connectivity. That combination is rare, very rare. Historically, the market pays enormous premiums for companies positioned at the center of multiple technological revolutions simultaneously. That's one reason investors became obsessed with companies like NVIDIA. It wasn't just about GPUs, it was about becoming critical infrastructure for an entirely new technological era. And now, some investors are beginning to ask a dangerous question. Could the space economy produce its own version of NVIDIA? At first, that sounds extreme. But so did Nvidia's valuation years ago. Back then, most investors thought gaming graphics cards were the entire story. They completely missed the AI explosion coming behind it. And this is where smart money psychology becomes fascinating, because elite investors are constantly searching for infrastructure bottlenecks, enabling technologies, critical suppliers, hidden monopolies, future dependency chains, not hype. Dependency, that's the real game. The companies the future cannot function without. And if SpaceX continues expanding at its current pace, entire industries may become dependent on technologies most retail investors still barely understand. That possibility is exactly why institutional money has quietly started increasing exposure across parts of the aerospace, satellite, semiconductor, and defense ecosystem. Not loudly, quietly, and that's usually how these cycles begin. Long before financial media fully catches up, long before the average investor understands the implications, long before the biggest moves happen. But perhaps the strangest part of this entire story is that the IPO itself may not even be the biggest catalyst anymore, because the anticipation alone is already changing capital flows, already changing investor behavior, already changing how analysts evaluate certain sectors. And some companies are beginning to benefit from that shift before SpaceX ever becomes publicly tradable. That alone should make investors pay attention, especially because IPO frenzies often create secondary explosions in adjacent stocks. We saw it during the EV boom, the AI boom, the cloud boom, the internet boom, and even the smartphone revolution. The ecosystem winners sometimes outperform the headline company itself. And that's where this story starts becoming much bigger than one IPO. Because behind the scenes, Wall Street may already be preparing for an entirely new investment era built around space infrastructure, AI communication systems, autonomous defense technology, and orbital connectivity. And if that thesis is correct, the first wave of winning stocks may already be moving into position before most investors even realize the race has started. For years, most investors viewed the space industry as speculative. Interesting, exciting, but ultimately too far away to matter financially right now. That perception may be about to change very fast. Because what's happening behind the scenes no longer looks like a science project. It looks like industrial expansion, massive industrial expansion. And historically, when entirely new infrastructure systems begin scaling globally, the companies supplying that expansion can enter explosive growth cycles long before the public fully understands what's happening. That's exactly why some institutional investors are no longer treating the space economy like a niche sector. They're treating it like the early internet. And the implications of that shift could be enormous, especially when you look at the numbers now flowing into orbital infrastructure, military modernization, AI communication systems, and satellite deployment programs worldwide. At first, many analysts assumed the demand would slow. Instead, it accelerated. Governments increased budgets, private capital surged, defense spending expanded, and global competition intensified. That last part matters more than most investors realize, because whenever geopolitical competition increases, technology races accelerate, and once nations begin viewing orbital infrastructure as strategically essential, the spending logic changes completely. Suddenly, cost becomes secondary. Speed becomes everything. That alone changes the investment landscape dramatically. Because the companies positioned near these spending pipelines could experience demand curves the market isn't fully pricing in yet. And this is where the first stock starts entering the conversation: Rocket Lab. At first glance, many retail investors still see Rocket Lab as a smaller version of SpaceX. But that may completely miss the bigger picture, because Rocket Lab isn't simply trying to copy SpaceX. It's quietly building critical infrastructure around the future space economy itself. And almost nobody is paying attention to how broad the company's positioning has become. Launch systems, satellite systems, space components, defense contracts, orbital infrastructure, government partnerships. That combination creates something Wall Street often loves: multiple future growth pathways at the same time. And this is where things start getting interesting. Because historically, the market rewards companies that become picks and shovels suppliers during technological revolutions. During the gold rush, many suppliers made more stable fortunes than miners. During the internet boom, infrastructure companies became giants. During the AI boom, chip suppliers exploded. And now some investors believe Rocket Lab may be positioning itself similarly within the space economy, not necessarily as the final destination, but as a critical enabler. That changes everything, especially because launch demand may increase far beyond what many current projections assume. AI systems need satellites. Military systems need satellites. Global communication systems need satellites. Earth observation systems need satellites. Autonomous logistics systems may need satellites. And every one of those systems increases launch demand. That creates a potentially massive long-term runway. But the real signal appeared when defense relationships started deepening. Because once defense agencies begin repeatedly working with a company, investors start paying attention very carefully. Defense contracts create recurring revenue, long-term relationships, political importance, strategic value, and often enormous future optionality. And this is where the market psychology starts shifting. Suddenly, investors stop asking, can this company survive? They begin asking, how large could this become if the industry scales globally? That's a completely different valuation mindset, and the implications are massive. But Rocket Lab isn't the only company quietly positioned near this transformation, because behind every rocket launch, there's another hidden layer most retail investors completely ignore. Semiconductors, advanced semiconductors, radiation-resistant chips, AI processing systems, satellite communication hardware, power management systems. And this is where another fascinating company enters the picture, advanced micro devices. At first, AMD may seem unrelated to the space economy, but when you connect the dots, the relationship becomes much more interesting, because modern aerospace systems increasingly depend on advanced computing infrastructure, AI-driven defense systems, satellite analytics, autonomous targeting systems, space-based communication optimization, data compression, signal processing, all require immense computational power, and the future versions of these systems may require exponentially more. That alone changes how some analysts are beginning to think about semiconductor demand. Because AI demand is no longer confined to cloud servers. It's expanding into defense, infrastructure, autonomous systems, and eventually, space-based computing ecosystems. And this is where investors may be underestimating the second-order effects of the space race. Every new orbital system creates additional computational demand somewhere else. More satellites mean more processing, more networking, more AI analysis, more infrastructure management, more autonomous coordination. And that entire ecosystem feeds semiconductor demand, which means some chip companies could quietly benefit from space expansion, even if investors never directly associate them with rockets. That's the hidden opportunity smart money constantly searches for. Indirect winners. The companies benefiting from trends investors haven't fully connected yet. And this is where Wall Street psychology becomes fascinating again. Because once markets identify a critical dependency company, valuations can change incredibly fast. We saw it happen with NVIDIA. We saw it happen with cloud infrastructure companies. We saw it happen with cybersecurity firms. And now investors are aggressively searching for the next infrastructure dependency story. Not the obvious story, the hidden one. And this is the part most investors are missing. The space economy may not create just one winner. It may create entire layers of winners. Launch companies, satellite builders, chip companies, AI infrastructure firms, defense contractors, data transmission specialists, power system suppliers, and possibly even nuclear energy companies supporting future AI and data center expansion connected to orbital communication growth. That sounds futuristic. But at first, AI data center demand also sounded futuristic, until suddenly it wasn't. And this is exactly how massive market shifts often begin. Quietly, confusingly, then all at once. But perhaps the most dangerous mistake investors can make during technological revolutions is focusing only on the most obvious headline company. Because by the time retail investors fully understand the opportunity, institutional money is often already deeply positioned elsewhere. And there are growing signs that this process may already be happening around the space ecosystem. Especially after several major funds began increasing exposure to aerospace, defense technology, and satellite infrastructure themes, not aggressively, strategically, which is often how early institutional positioning looks. Small moves first, then larger moves later once conviction grows. And conviction appears to be increasing rapidly, partly because global governments are no longer treating space dominance as optional. They're treating it as strategic survival. That changes spending assumptions enormously. And whenever governments, defense agencies, and technological megatrends begin aligning simultaneously, entire sectors can reprice very quickly. That possibility is exactly why some investors believe we may still be in the very early innings of the space infrastructure trade. Not the late stages, the early stages. And if that thesis is correct, the stocks benefiting first may not even be the companies retail investors are watching most closely right now. Because sometimes, the biggest winners are hiding one or two layers deeper inside the system itself. And the next company connected to this transformation may be one of the clearest examples of that dynamic yet. By the time most investors realize a technological shift is real, the easy money is usually already gone. That's the uncomfortable truth Wall Street rarely talks about openly. Because the biggest fortunes in market history were often made during the phase where the story still sounded uncertain, too early, too speculative, too confusing. Amazon during the early internet era, NVIDIA before the AI explosion, Tesla before the EV infrastructure build-out. At the time, all of them looked risky, incomplete, possibly overhyped. But behind the volatility, something much larger was quietly forming. Infrastructure dominance. And now, some analysts believe the space economy may be entering a very similar phase, not fully obvious yet, but impossible to ignore once the pieces begin connecting. And one of the companies increasingly appearing in those conversations is L3Harris Technologies. At first glance, L3Harris doesn't generate the same excitement as SpaceX headlines. There are no viral rocket launches, no billionaire celebrity factor, no nonstop retail hype. But that may actually be the point, because historically, many of the biggest institutional winners emerge from companies the average retail investor initially overlooks, especially in defense infrastructure. And this is where things start getting very interesting, because modern space systems are no longer just about exploration. They're becoming deeply integrated with military intelligence, secure communication, surveillance systems, AI, battlefield coordination, autonomous defense technology, and geopolitical power projection. That changes everything. Because once space infrastructure becomes tied directly to national security, the ecosystem surrounding it can become extraordinarily valuable. And L3Harris sits directly inside several of those systems: communication technology, defense electronics, satellite systems, surveillance infrastructure, mission-critical networking. At first, those sound like separate businesses, but when you zoom out, they begin forming something much bigger, a connected defense and space infrastructure web. And this is where Wall Street psychology shifts again, because markets tend to reward companies that become indispensable during periods of geopolitical uncertainty, not just profitable, necessary. That distinction matters enormously, especially today, because global tensions are rising across multiple regions simultaneously. Governments are increasing military modernization budgets, AI warfare systems are advancing rapidly, drone technology is evolving fast, satellite dependency is increasing, and secure global communication networks are becoming more strategically critical every year. That creates a potentially massive long-term spending cycle, and this is the part most investors still underestimate. Modern warfare is becoming infrastructure warfare. The winner isn't just who has the strongest weapons, it's who controls communication information, AI coordination, satellite visibility, autonomous networking, and real-time data flow. That's where the future battlefield is moving. And companies positioned near those systems could become extremely important over the next decade. But here's where things take another turn, because the space race isn't only accelerating because of governments. Private capital is changing the game too. Massive private capital. For decades, governments dominated aerospace development. Today, private companies are driving enormous portions of innovation. That shift creates something dangerous for markets: speed. And markets struggle to price exponential acceleration correctly, especially when multiple technological revolutions begin overlapping at the same time. AI, defense modernization, autonomous systems, orbital infrastructure, advanced semiconductors, global connectivity, all are now colliding. And whenever multiple megatrends collide, entirely new market leaders can emerge unexpectedly. That's one reason some investors are becoming increasingly interested in companies supplying critical aerospace materials and manufacturing systems, because rockets aren't just software. They require advanced alloys, precision manufacturing, specialized electronics, thermal systems, energy systems, and highly complex industrial supply chains, which brings another fascinating company into the discussion: Hexcel. Almost nobody outside aerospace circles talks about Hexcel, and that's exactly what makes the story interesting. Because hidden industrial suppliers often become massive beneficiaries during infrastructure booms, especially when demand suddenly accelerates faster than supply chains can adapt. Hexcel specializes in advanced composite materials used heavily across aerospace and defense systems. At first, that may not sound exciting, but advanced materials are often one of the most important bottlenecks in next-generation manufacturing. Lightweight strength, thermal resistance, structural efficiency, fuel optimization. These things matter enormously in aerospace economics, and once launch frequency increases, material demand can rise dramatically. That possibility becomes even more important if reusable launch systems continue scaling globally, because contrary to what many people assume, reusability doesn't eliminate manufacturing demand. It can actually increase total ecosystem expansion: more launches, more systems, more satellites, more infrastructure, more maintenance, more advanced manufacturing. That creates long-term industrial demand curves that markets may still be underestimating. And this is where the broader investment thesis starts becoming incredibly powerful, because the space economy isn't one company. It's an industrial chain reaction. A chain reaction many investors still view too narrowly. They focus only on rockets. But behind the rockets sits an entire ecosystem quietly preparing for scale. And the implications may extend far beyond space itself. Because orbital infrastructure may eventually reshape AI communication, global internet systems, military coordination, logistics networks, autonomous transportation, weather intelligence, financial connectivity, and even energy optimization. That sounds almost unbelievable. But at first, the internet also sounded unbelievable. Most people forget that. In the early 1990s, many investors thought the internet was overhyped nonsense. Then suddenly it became the backbone of the global economy. And some analysts believe orbital infrastructure could eventually follow a similar path, not replacing the internet, expanding it, reinforcing it, globalizing it further. That possibility alone changes how investors may eventually value companies connected to this ecosystem, especially if SpaceX becomes the catalyst that forces Wall Street to fully recognize the scale of the opportunity. And this is where investor psychology becomes extremely dangerous, because once retail investors emotionally realize a new megatrend is real, capital floods in aggressively. FOMO takes over, valuations expand rapidly, narratives intensify, and sometimes the biggest moves happen in surprisingly short periods of time. We saw it during the EV mania, AI infrastructure expansion, cloud computing, semiconductor surges, cybersecurity booms. The market suddenly re-rates entire industries almost overnight. And if the space economy enters that phase, many current valuations across aerospace infrastructure may look very different a few years from now. But the strangest part of this entire story may be that the biggest winner still hasn't fully revealed itself yet, because hidden beneath the satellites, rockets, and military systems, another powerful force is quietly emerging: energy, massive energy demand. And once investors fully understand how deeply AI, orbital infrastructure, and next-generation communication systems are tied to future energy expansion, the entire investment narrative may evolve again in ways very few people are currently expecting.